So you see, gradually we are building on to solving illustrations. So let me reiterate the point that I just made about updating the cash book and then the reconciliation statement. So I've done the division for you. Please note these divisions. They are very, very important. Right. Okay. But let me say that in some textbooks, you see the 7 errors which are expected to be adjusted or updated in the cash book being done on the reconciliation statement. Technically, it shouldn't be the case because you can't do those things on your reconciliation statement, right? These 7 courses are supposed to be adjusted or updated in your cash book. So currently, the syllabus has shifted from that. Okay, so if you see anything like that, don't pay much attention to. It's always going to be update your cash book and then you prepare your reconciliation statement. Okay, so let's look at the adjusted cash book or updated cash book, right? So your cash book bank could have a debit balance, right? Or a credit balance. And last time I told you, if your cash book bank is showing a credit balance, then that is called an overdraft, a bank overdraft. Okay. So depending on the question, you may have an overdraft or a normal favorable balance. You put it in. So we put overdraft at the credits or credit balances at the credit and debit balances here. Then the things that I mentioned, so you can see the credit transfer, income received, dividend received. These items are debited. Why, professors? The reason is simple. Credit transfer means that somebody has deposited money in your account. So you are receiving the money into your account. And if you are receiving money, what do you do to your cash? You debit it. Interest received or dividend. There's also another money you are receiving because probably you have done an investment or you are a shareholder of a company. So if you are receiving, you do what? You debit. Now, all these ones, bank charges, standing order, debit transfer, per the explanations I gave, these are also payment. Bank charges means you are paying the bank because they are giving you some services. Standing order means you are instructing the bank to pay. Debit transfer means the bank is making some statutory payment, okay, on your behalf, the e-levy example I gave, right? So these are also payments. And in your cash book, what do you do to payment? You credit them. Now, for the dishonored check, please listen carefully. I said that a dishonored check is a check you have received from your customer. And professors, when you receive a check from your customer, you debit your cash book bank. Now, if you go to the bank and the bank says, we can't pay because the check has issues, then what you have to do is to come back to your cash book and credit it. So you will credit this dishonored check to cancel the earlier debit we made when we received the check. So this dishonored check is put at the credit side to cancel. Because when you receive, you debit. So if the bank says they will not pay, you have to cancel it, right? So that's why this dishonored check is at the credit side. Because it doesn't connote any payment. That's why I'm explaining further. The dishonored check is not a payment, but it is to cancel an earlier amount. So for example, if you received 3,000 Ghana cedis check from your customer, you go to the bank says, we will not pay this 3,000 because the check is not good. The date is wrong. When you come back to your office, you have to go to your cash book and say, okay, the 3,000 was not what paid, so I have to cancel it. And you know, in accounting, you cannot come and just draw a line here and cancel, or erase it, or use correction fluid. So you pass a credit entry that the signer check 3,000 so that it will cancel it off. So that's why we have this dishonored checks here. Now for the errors, depending on what happens, okay, the error may be corrected at the credit side or the debit side. Okay. So, professors, that is a bit about the adjusted cash book. When you finish, you balance your cash book with your carry down, brought down, and that is it. So the items that we mentioned, standing order, bank charges, debit transfer, the standard check, you credit them, and these ones you do what? You debit them. Please, any question? I know your response is no. So let me continue. Now, when you come to the reconciliation statement, professors, we have 4 formats. 4. 1, 2, 3, 4. Now, the first 2 format is based on a positive balance. And when I say a positive balance, it means that your cash book has its normal balance. As we know, bank is an asset, so bank has a debit balance. So a debit balance on your bank account in your cash book is a positive balance or a favorable balance, right? Likewise, when you go to your bank statement, for your bank statement, a positive balance is a credit balance. Note it, right? So the opposite is that if your cash book is showing a negative balance, what we call unfavorable balance, then that is an overdraft. So that one, your cash book will show a credit, but your bank statement will show a debit. So note that the cash book and the bank statement is the opposite of each other, right? So the format is based on either you have a positive figure or if you have an overdraft. And last time I mentioned an overdraft could be labeled with this figure or this symbol O/D, right? Like this. When you see O/D like this, it's an overdraft. Okay. So let's look at when it is positive and then we'll come to when it is an overdraft. If it is positive, again, you can decide to do your reconciliation by starting with the balance per the cash book, right? Or you can decide to start with the balance per the bank statement. Okay, so that one is your choice. Oh, I just lost the professor. Oh, that's actually, I guess, no problem. So if you choose the balance per the cash book or you choose the balance per the bank statement, then the format would have to change. Okay, but let's pick the first one. If you choose the balance per the cash book, professors, we are saying you add unpresented checks. I think now you know unpresented checks, right? So if you choose to start with the balance per the bank statement, you add unpresented checks and wrong credit. And you know wrong credit is an error made by the bank if the bank wrongly credits the account. Then we less uncredited checks as well as wrong debit. Now, last time I explained why we are adding unpresented and uncredited, but today I think let's do some babadie small, some chew and pull. So this is how I want you to chew it. Say if you start with balance per the cash book, you add unpresented check and you less uncredited check. Okay, do that babadie for me. Because if you get this first format, you can manipulate it and get the remaining 3. Why am I saying so? If you want to start with your balance per the bank statement, then it's the reverse of this one, right? It's the reverse of when you start with the adjusted cash book. So that one, if you start with the balance per the bank statement, you add uncredited checks and you less what? Unpresented checks. So you can learn one format. and manipulate it to get the other. Okay. But let me make you appreciate the add and less so that at least it will make sense. So let me come here. So professors, if you look at this cash book and this bank statement, right? Okay. You see that there's a positive balance. Our cash book is showing a positive balance, debit balance, and our bank statement is also showing a positive balance, 3,000, 3,000. Let's pick unpresented check, right? We are saying this is a check that you have paid, you have paid the check, but the bank has not debited you. So let's say we paid Kofi 500 cedis. So immediately we pay Kofi 500 cedis. Our money in the cash book will come to say 2,500. But Kofi has not presented this money here. Okay. Kofi has not presented the money here for it to be deducted. Okay. Okay. So because Kofi has not brought it, the bank has not debited. So our bank is still showing 3,000, while our cash book is showing, say, 2,500. The problem we know is an unpresented check from who? Kofi, right? So the question is, if we want to make the two balances agree, if we want them to be equal, we can decide to start with this balance per the cash book or the balance per what? The bank statement. If we start with the balance per the cash book, which is 2,500, you would all agree with me that we would have to add the 500, which is the unpresented check. So that is why when you start with the balance per the cash book, you add unpresented check, because that is the only way the two balances would what? Agree. Because if you add unpresented check, then you get 3,000 what? 3,000. But if you decide to use this balance, that's the balance on the bank statement, then you would have to do what? Less the unpresented check. That is why if we use the balance per the bank statement, we less unpresented check. Because it's only when you less the unpresented check 500, the balance will come to 25, equaling the 25 here. Okay, so that is the understanding behind why we are adding a lesson. But I think I'll need my professors to do a little babaji small. So now we know the cash book, we know the reconciliation statement. What is left is for us to try some examples or illustrations. But professors, as I always do for my students, it's enough. Let's go and grasp these formats. Okay, these formats, and especially the adjusted cash book and the reconciliation statement, right? So I think I will show I have to send you the notes so that you can go through. In the case of an overdraft, right, I have also indicated the formats there with the overdraft as well. So don't let it confuse you. Just study the formats, okay, and the adjusted cash book, so that hopefully, I think we are meeting on Thursday. Yes, Thursday we'll solve like 2-3 illustrations, and then my professors should be very comfortable with bank reconciliations. So I think I'll pause here. Question time. Question time. Please ask me, at least ask me one question. Otherwise, I'll cry. Because if I teach and my students don't ask questions, actually two things are involved. It's either they understood everything or the whole show. So which is which? Is it the whole show, or say we are okay? We'll go and just familiarize with the formats. Okay, I think I'll hear from each and every one of you. So Adam, Prof. Adam, are you okay?
Yes, I'm okay, I understand.
Okay. Professor Deladem, is it the whole show or you are okay?
Please, I'm fine.
Okay. Professor Ella, and okay, so Ella, what's your version?
Please, I'm okay.
That's nice. And then Professor Charles. Okay. As for Alexia, I'm sure she is also okay. If not, Alexia, put it in the chat. So, professors, I think today I will do my possible best to share the videos. I beg you, if it's not coming, come on the page and say, "Sir, you said you send the videos." It's a way to motivate me to send the videos. So I'll share the videos so that you can at least watch or review over again, okay, to pick few things. And I also share the notes with you so that you can. Um, but please, my notes are copyright protected, so it's only for your consumption, right? Uh-huh. Um, if you give it to a friend, no problem. The friend will learn it and also take something. But don't sell it, okay? Not for commercial purposes, unless you see me for that right to sell my notes. Otherwise, I will sue you and I'll take compensation. Anyway, that's just by the way. But take the notes, make good use of it. If a friend wants to, why not? You can share with a friend, right? And probably that will get that friend to come to join us on Omega. And I'm still entreating you to get few friends to come. You know why I'm saying this now? Because I'm recording it. I can't say the reason why, but get your friends to come so that Omega will be a big family. Okay, so thank you very much, professors.